Yo, welcome back to the channel. Today I'm going to talk about possible a possible scenario that I'm thinking up in my head, which is only my opinion, not financial advice. If you want financial advice, go pay for it. Um, of how this economic collapse that I believe is coming in 2023, in my mind, without a doubt, um, is going to unfold or could unfold in a hypothetical scenario. So I believe that I should move that can out of the way. It's a bit messy. I believe that we are going to have in my country a 0.75% rate hike this next week. And this is going to be a catastrophic blow to the economy. It doesn't mean that when we get this rate hike that everything's going to fall over, but it's going to sort of seal the fate. Now, I believe that inflation will not surrender from this rate hike. But this rate hike will hurt the economy, it'll hurt asset prices, and then the real meat and potatoes is in February. I believe that before the February rate hike, when the inflation data comes out, it's going to be higher or remain constant or barely have gone down, one of those three, as to what it is now. So they've done this 0.75% rate hike, and they just did a 0.75% rate hike, I think. So it's like 1.5%, Or no, it was 50 per points last time, I think. It was 1.25% in two hikes, two meetings. And yet inflation has not gone down. We have the highest interest rates in a long time. I think since 2007 we last saw interest rates like this, and we know what happened then, and we didn't have the debt that we had then. Our economy got in trouble, and I know that over the time the value of the currency has gone down. But people had $300,000 mortgages and stuff back then. It wasn't as bad as it is now. Now we've got debt everywhere. Our economy is based on debt, and the whole global economy is the same. So, while we go into Christmas, which is inflationary because of demand for supply of goods, and come out of Christmas, we're getting a 25 cent a litre fuel tax come in, and this is really going to hurt consumers. You're going to see, unless fuel prices happen to come down, but if they go up as well as that 25 cent, you're going to see consumer spending grind to a halt. Now, in September, we had 50,000 consents for construction, or I believe around that figure, somewhere around there. And that was in September, and this is in New Zealand. And this construction will finish these jobs, but what jobs are next? Because a lot of things are being built, like apartments and stuff, and they're not selling. There's a lot of people stuck with new built property that isn't moving, spec homes and the like. Because nobody thought in January this year that prices would have come down month after month after the month all year, and that interest rates would be where they are now. Well, I thought it, but most people didn't. And so you've got the scenario where, like, people have built these homes and they thought, well, I can't give it away, I can't sell it for less than I paid for it, but then it's gone bad. I've seen houses that are down between 40 and 50% on the GVs, the rateable values, the rateable value of the house, and they haven't got a buyer. And so what did I see? One was around $1.2 million GV, and they were asking for inquiries over 599 in what was one of the most expensive cities in the country. And they haven't sold the house yet, or they might have done, but if it doesn't sell by this Tuesday next week, that means the stress test is now going to have to go higher to get the money. That means businesses are going to struggle more. That means the value of housing is going to get pushed down by now a higher servicing cost of that debt. People are already sort of maxed out. So if you put up the interest rates nearly 1%, and they may even do it 1%, because they must be starting to panic. They must be. And it just reminds me of like the Titanic when it hit, it's taking on water. People weren't racing to the lifeboats because they thought everything was going to be fine. But I don't think so, because our government has too much debt. Our consumers have too much debt, and it's all based on low rates of interest remaining constant, and they haven't remained constant. Inflation has not remained constant; it's gone up, big time. The cost of living's gone up. The world economy is not that great. People aren't spending money on higher maybe going out to restaurants. Oh, we've got to put fuel in the car. The European winter, particularly in like places like Germany, will be very, very bad and very, very hard, and there will be massive electricity shortages. That's what I think will happen, and it's going to be unsustainable. And the Germans and countries like that are going to be panicked, because where are they going to get the energy? Which means anybody providing the energy is going to have to charge for that. So again, inflation is going to go through the roof in Europe over winter. It's going to be a very hard story. Now, this might not be shown much in the media over here because, Russia's been sanctioned. It can't be shown that it's hurting the people who did the sanctions, but it's going to hurt the people who did the sanctions. This pipeline being destroyed, sabotaged, is going to hurt the consumer of that electricity that no longer can get the gas in enough quantity. So I believe that's going to be catastrophic. We're going to see used vehicles and new vehicle sales start to really decline. That's already happening. The used vehicle market went like this, and now it's going like that, and it's bad. And the first massive blow to any sector, I believe, will be anything to do with housing. So that is construction, real estate sales, developments, things like that. All that sort of stuff is going to get hit hard, because we've got these 50,000 consents, and let's say they every few months a job finishes up and they go on to the next job and the next job and the next job and the next job. But if there's not a next job, or it starts getting harder to get that next job, or people aren't building anymore, then suddenly there's no construction work, and that is catastrophic. This is the middle class of New Zealand. This is the hard-working tradies that are going to be put out of work, I believe, from higher rates of interest and inflationary pressures on construction costs. So we're going to have that as a problem. And if they do open up to immigration, it's great that you can get work. So if you're trying to build a house and you cannot get a tradesman, people coming in from other countries to help with those projects is great. But if we start getting people coming in, which should increase, but there's not actually the construction for them, that just means there's more supply and demand of labor, more supply of labor with less demand. So it could see that wages in construction go down, even though inflation has gone up. So that those construction workers who, for example, could be on $50 an hour and get laid off, and the best job they can find is on 25, for example, then now they're earning half as much money. The cost of living keeps going up. Interest rates on their mortgage start going up. They won't be able to survive or keep their homes or whatever. There could be a huge problem there. Retail and hospitality will really slow down. Now I'm picking this will start really becoming evident around March. And I reckon by June or July, the realization that the enormity of the situation of printing all this money, getting inflation, which has come from printing all this money, and then having to deal with this massive problem. Have you ever done something and you've regretted, like, I can't believe I did that, I've got regret, because fixing the problem is massive. Well, our our economy is going to find out a very hard lesson. You can't get everyone to stay at home globally, print a bunch of money, hand it to them, produce nothing, let them out with their pockets lined with money because they've been stuck at home and haven't spent anything, dump it all into the economy. It goes around, it sloshes it around for a bit, everything seems great. Look at our economy, it's great. Wages are going up, demand, all this sort of stuff. Well, it's great. All of a sudden the inflation rears its ugly head and we're in a world of pain. House prices, I firmly believe, I don't know, but I firmly believe from the peak, now this is going to sound crazy how much I think they will go down, but you have to remember from, like March 2020 in like the peak, which was I think like June or July 2021, gone up 50%. Prices have gone up 50% in like just over a year. So that's crazy, right? That is insane. I think they will go down that 50% and another 20. I think they will go down 70% from the peak, which will be a massive buying opportunity for those who are wealthy in a crisis. But a lot of people will not be wealthy. A lot of people won't have a tin of beans or a roof over their head. So you need to make sure that you are prepared as best as you can for the situation. If you're out of work or you can't get access to food or the shelves are bare or a complete collapse of society, I think is completely realistic. And if I listen to the sort of the experts that are coming on, these internet chats, and the guru of my country is kind of saying next year in March house prices will take off again. They're not going to go down much further. Inflation's going to go away. Interest rates are going to peak. It's only going to be a mild recession if we even get one. This is nonsense. I would say that is bought and paid for by the people who are telling them you can't go and tell the truth, because if you do that, the economy will implode. Because people will say, wait a minute, house prices are going to go down another 30%. Well, I'm going to wait. Right? So we're going to see that. I think we will see the stock market, like the US stock market, Dow Jones, talking like that sort of side of thing. I think we're going to see that down considerably by June, July next year. And I think that the economic panic, when it turns into a sheer panic, will be October, November next year. Now, this is just what I think. It's not what I know. If you want financial advice, go get it from someone else, not me. But I'm putting this out there because let's see how accurate my predictions actually are. What I've just said, what actually comes true, because it might be none of it comes true. But let's see, when does that construction sector dry up? Well, I've said March. I've said that February, the rate hike will be again at least 0.75, and inflation will be worse or higher or minimal downward, 0.1% lower, for example, than it is now. And they'll realize, oh my gosh, these rate hikes are not actually working. And if they are working, they're not doing enough. They're letting inflation stay up here. They're hurting the economy. The longer this goes on, the higher, the more out of our control we could end up with a complete currency collapse. So we're just gonna raise rates. And if they don't do that, it's either they chicken out and they just cut rates and just let inflation soar, which is a situation worse. So either way, these two options, they don't allow for a mild recession. They allow for a inflationary depression or a massive depression, a giga depression, worse than 2008, worse than 1929, like worse than lockdowns, worse than everything. And I think you're going to see governments, like our government will probably start trying to hand out money and say, look, it's tough and people are struggling and we need to do something, and they'll start handing out money to the consumer. However, this is going to create more inflation. I mean, that's exactly what we did. We handed out $350 to anyone in this country who had earned under 70,000, right? Now, where did all that go? It didn't go to... See, the Fed was doing this, and it would go to Wall Street, and Wall Street would invest it into stocks, and stocks and assets inflated. But it didn't seem to go into the grocery store, right? But when you give the consumer, not Wall Street, that kind of money, and they're scraping to pay their bills, they spend it on food, they spend it on energy, they spend it on paying down debt, but it's all inflationary. It goes and it gets dumped into the circulation of the currency, and it gets dumped instantly. It doesn't stay with them for a long period. It's just straight into the supermarket. So while we've got the Reserve Bank hiking interest rates, we're lolly scrambling out money, and I think you're going to start seeing it's the rich's fault. Look at the rich; they've got everything while we've got nothing. They did this. I think we'll see a lot of rhetoric that's just really bad, that I just would not want to see. Scapegoating, where you've got governments who say, well, we're gonna do something inflationary in an inflationary environment because we care about the people, which will make the inflation worse while the Reserve Bank's trying to fight it. And I think you could have the Reserve Bank, the government going head to head, butting heads, making it worse. So, yeah, I honestly believe by this time next year, it will be a full-blown panic. And you're going to start to see this. This European winter is going to be interesting. There'll be a lot they don't cover in the media because sanctions can't be seen to hurt the person sanctioning, but they're going to. So whether they cover it, but I mean, I've already seen there was one with Molotov cocktails being thrown at the parliament in Greece, protesting inflation. Now, this is going to become very normal. People are going to lose their minds because everyone's been used to a standard of living. A lot of people made a lot of money in the last 10 years because of all the low interest rates. And suddenly, it's that rags to riches. They had it all, they lost it all, now they're losing it. And I think we're going to see a lot of that. So, write your predictions in the comments. How do you see this playing out? Do you agree with me? Do you disagree with me? Do you think that 2023 is going to be the year of the global economic collapse? I honestly believe it can't go another 12 months. Watching the trajectory, and if it does, I will be quite shocked. Hey, I could be a year early, but I don't think it'd be more than a year early. I think that would be a lot of leeway there. So anyway, thank you for watching the channel. Subscribe, like the video, comment. It really does help me because it makes it a lot less of a lonely place on YouTube if you actually engage with me and all the rest of it. So thank you very much for tuning in. See you in the next one. Peace.